So imagine you own a house, you have a tenant, they pay the rent, and for a time, everything is good. Until the economy starts to slip and the tenant's business starts to fail. They're finding it hard to attract new clients. That's the relationship between two companies that have just intertwined to cause a over $3 billion loss to investors and the stock market. And it might be coming to you soon because you very well might have some interest in the company that lost all the money. Let's talk about the relationship between VICI Properties and Caesars and how it intertwines with the entire market. My name is Steven, this is NLLV. So to understand how an allegedly failing Vegas casino operator can lose Wall Street billions of dollars, we need to, in the very simplest of terms, explain what's going on here. Back in 2017, a failing Caesars Entertainment was coming out of bankruptcy, and they formed a company called VICI Properties. VICI Properties would be able to offer real estate assets in a giant trust to investors, and so long as every time they bought a property, the former landowner became a tenant and would pay their rents on time and the properties would go up in price, VICI Properties would continue to grow in value. And because VICI Properties was formed as an offshoot of Caesars Entertainment, it meant that VICI Properties contained a lot of assets from Caesars, things like Caesars Palace, the Flamingo, Harrah's, former Bally's, current Horseshoe. These are all types of assets that could be tied up in this giant trust. And all sorts of people can buy into this trust. Large Wall Street companies like BlackRock and different hedge funds buy into it, and regular retail people then follow through, buy into it as well. So you actually might have money invested in the Las Vegas Strip without actually knowing it, unless you take a close look at where your interests and your investments are stored and held. And for a time, it was good. Caesars was able to continue to pay and service its debts. They were able to actually pay their rents that they owed to VICI Properties for doing business here in town. That was all fine until the last year or two when things started to show cracks. Cracks like people not coming to Vegas because of audacious prices. Cracks like people skipping the city entirely. Cracks like Caesars unable to continue to trim down and make their company leaner and leaner, because that's how they were reorganizing their debts. So Caesars recently said on one of their earnings calls that they may miss their 2025 debt reduction goal, which was $1 billion. This is what the company who bought Caesars and took it out of debt, Eldorado Resorts, likes to do. They like to go in and make companies leaner, but there's only so much meat you can cut off the bone until you're just sucking on the grizzle, so to speak. And with this caused VICI Properties to drop a lot. I mean, this is a company that usually posts profit after profit, and they actually dropped 8.43% in October. And over the last 90 days, they're down 11.61% overall. This has caused billions of dollars to be basically shed from the company based on the stats I'm putting up on the screen right now. I mean, their largest shareholders are big companies like Vanguard, BlackRock, State Street, Capital Group. I mean, but the problem here is what you need to understand. It's very important that you guys get this. These are companies that you like to invest your money with. So when you put your money with, say, Vanguard, you expect them to fund your 401k, your retirement. When Vanguard puts their money with VICI Properties, you expect them to make good investments. And when Caesars can't pay their bills, all of your investments drop across the board. What are you going to do about it? And this plays into the bigger overall economy, of course. Actually, there's an 11.8% delinquency that's happening on commercial real estate across the country. And for the record, that's actually worse than back in 2008. See, COVID changed everything, and we know that, right? We like to throw those words around. 9/11 changed everything. COVID changed everything. But in terms of commercial real estate, it certainly did. Before the pandemic, we had commercial real estate at a premium. It was the easiest investment in the world. Money was flowing into these markets and leases were being formed and people were renting spaces because they couldn't get in to buy them. How's that treating you now where you can't find a tenant to actually rent the place? You can't pay your bills. We're sitting on a giant bubble. It's going to be a giant, huge bubble that when it bursts, It's going to reorganize everything, and you're going to see a lot of businesses go out of business. As a matter of fact, that bubble sits right now at $1.5 trillion. And once that goes, everything has a cascading downstream effect. And when these loans were actually taken out, they were close to $0 because of the ridiculousness that happened around interest rates during the COVID pandemic. And for those who don't know, we've been trying to tell you, and realtors have been telling you, and mortgage people have been telling you forever, as you won't buy a house. The housing market is at a stalemate right now. They've been saying that you can sit around waiting for the 1.7% interest rate. It's never coming back. And it certainly isn't. And it won't matter how much the Feds cut interest rates, because in the next 14 months, when these things all start coming due, it's going to mean that they are refinanced at 5%, 6%. So if the delinquencies are high right now, what's going to happen to them when this bubble bursts? And so this is how what happens in Vegas moves the stocks and creates huge volatility for people, right? So number one, Caesars can't make money. Because why? Because people aren't coming to Vegas because the economy is in the absolute toilet, and most people can't afford a $500 expense nowadays, let alone come to Vegas. Number two, they can't pay their rents. Goes to VICI Properties. They admit that they're having a problem with Caesars. VICI tanks 11 point some odd percent, $3 billion wiped off their books. BlackRock, Vanguard, different hedge funds that buy in lose money, you lose money, everybody is losing, the market's going down. Did you know you can make money off the market going down? A lot of you guys think that trading is just putting in money and waiting for it to go up. No, that's not true. But you know what? It's that volatility that makes it so sweet, because I go every day, I open my laptop up, I see the price goes up, I click a button. Okay, I made $100. It goes down $50, whatever, pay a bill or two. Hey, is that you? Are you going to do that? Are you going to take advantage? Here's the thing. You can get my course. It's how I keep the videos free. I think I got 4 spots on this video left. It's 90% off for now, but I got to raise the price soon because we keep adding more content. You'll find a link below. If you can't find the link below, then I can't help you. How did you even manage to use YouTube? I don't get it. But go get it for 90% off. I think the code's 18 this time. Find a link, go click it, because you want to be smarter than all your friends at dinner parties, and you want to change your life, right? So go learn. Corporate bankruptcies right now are sitting at a 14-year high. And so far in 2025, we've had 686 companies file for corporate bankruptcy across the United States of America. And for the record, this is the highest it's been since 2010. That was right after the great financial crisis that everybody suffered through. And it should stand to reason that the economy is not as good as they're telling you it is. If we have Vegas, where people aren't coming in to the point where Caesars can't make their payments and they're trying to reorganize with their REIT, their real estate investment trust, corporate bankruptcies are way up. Is Caesars going to go bankrupt? I don't know. I don't have a crystal ball. Is it a stock you should buy? Probably not. But why is this actually happening? Why is it that like Party City, Spirit Airlines, we got so many on my list, I got to look at my cheat sheet. Party City, Tupperware, Red Lobster, Spirit Airlines, Avon, these aren't small little companies. These are actually pop culture brand names. We all used to make fun of Spirit Airlines for their terrible service, right? And they just can't survive. What happened? A lot of these companies after COVID-19 took cheap money because the interest rates were set so low by the Federal Reserve here in the United States, coupled with taking bailout money, government loans. It was just a fiasco of, everything is free, everything is cheap. So when you take a loan at 1% to 2% and then 5-6 years later, 3 years later, when your term is up for renewal and you have to renegotiate, now you're paying anywhere between 5 to 7% for that same debt. And these companies were not exactly lean, mean fighting machines in a lot of cases. Companies like Party City are very cyclical, and they're always going to depend on the time of the year for people coming in. They had to fight against Spirit of Halloween stores and Walmart, who then decided that they wanted to get in the game. That's just one such example. And now they're feeling the consequences of having all that cheap money. So to kind of triple down on this, the recovery for these types of loans is the lowest it's ever been, 16%, which means that when a company does go into bankruptcy and they try to restructure and get better, most of the time, anybody who's buying that debt is not getting that back. So there's less people interested in trying to help companies recover. The companies are not coming out of recovery, and it's shedding jobs all across the line, because when they do try to recover, they oftentimes just lay people off. If you got, for example, YouTube, you heard what happened at YouTube? YouTube is a great example of this. YouTube just offered a buyout to all of their employees. Whoever wants to take it. You don't have to work here anymore, but we'll pay you some money if you walk away. This just is an example. And YouTube is actually highly profitable. It's one of the most profitable parts of Alphabet, the parent company that owns Google and everything else. And if they're trying to restructure and lay people off, what does that say about you and your job? So as I've told you on the channel before, everything in life comes back to Vegas, and Vegas predicts recessions and moves the economy in strange ways. And in this case, it's not all that hard to understand. Back in 2020, companies took very low interest rate loans that are now coming to maturity and need to be refinanced. In order to keep themselves as profitable as they possibly can, these companies are oftentimes laying people off. We have almost 1 million jobs in layoffs, with 70,000 in the last week alone happening. We did that video yesterday. We have entire divisions being reorganized, and we have the quality and level of service going down. When that happens, it leads to people not being able to afford to come to Vegas. And when people can't afford to come to Vegas, companies like Caesars Entertainment, they tend to increase their prices. So the people that are here tend to spend more money while they're in town. But even that couldn't help Caesars in this case, because it became clearly evident that VICI Properties was under some kind of concern that Caesars may not be able to pay their rents or has missed payments on rents. We'll find out in the future. We don't know quite yet. And that caused the value of VICI Properties as a whole, as an investment, to shed $3.07 billion over the last month of October of 2025. This then led to companies that are heavily invested, like Vanguard and other big large firm investment companies, to lose value as well. And those are the same companies that you park your money with, so you can someday retire and not be required to rely on Uncle Sam. I almost did that whole thing, that whole monologue, without stumbling over my words. My goodness. And so this channel here is a channel that's devoted to giving you a broader economic perspective, where we start off with a Vegas lead-in. Today it all tied back into Vegas, but we like to do updates, and I'm trying to make daily updates. And if you guys like this update, you want to see daily updates, growth on YouTube is hard, subscribe to the channel, get more information, more knowledge. More knowledge is more power. My name is Steven. This is NLLV. If you like my teaching style, you're going to love my course 1K a day. Go learn how you can capitalize on the stocks going up and the stocks going down by going to 1kday.diy, typing the code 18 into the box when you check yourself out of that, and get it for 90% off. If you guys are just browsing through, be sure to subscribe. Until the next time, we say 3, 2, 1, click. I'm out of here. Thanks so much for watching.